Hi and welcome to this week's market update. Well, the US markets rallied pretty heavily overnight after traders started to feel that the reporting season that we've started in the US is looking better than expected. We've had some results out from the US banks and they all show that earnings are certainly holding up or actually coming in a little bit better than was expected. This has actually helped lift our market. We've seen a really big rally today, up to almost 2% at the moment, as investors start to feel that we should also see some positive results in our reporting season, which will start in August. The market here and in the US both still face the chance of rate rises in the next couple of weeks. The US has a rate meeting next week and they're expected to maybe lift between 50 and 75 points. And our market, we have RBA meeting in the first week of August, and at this stage we feel there'll be a 50-point lift in that period. This week we've seen ANZ Bank come out with a takeover bid for Suncorp's banking division. You may remember, if you follow our newsletter, we did mention that we thought Suncorp's banking business was up for sale, and we knew a few of the banks were sniffing around, so ANZ have come out and thrown a bid on the table. To fund that bid, ANZ are doing a capital raising. So for ANZ shareholders, you're going to get the opportunity to buy one share for every 15 shares you own at $18.90. We think that's pretty attractive capital raising, so we'd certainly encourage any client that owns ANZ shares to look at taking up their entitlement. If you don't want to take up the ANZ entitlement offer, you can sell that entitlement in the market. They will be trading as an ANZ right, and you'll be able to sell them that way. Certainly don't ignore this. There is value in the rights, and if you can take the stock up, we recommend you do if you're comfortable holding the banks. For Suncorp holders, as I mentioned before, we'd already indicated we felt the Suncorp banking division was on the chopping blocks, and the reason that the Suncorp board would have wanted to sell the banking division off is it doesn't generate anywhere near as good a returns as the insurance business does. So while Suncorp will actually shrink by selling off its banking division, we actually feel it'll be a leaner business with a better net return on equity. For Suncorp shareholders, there is likely to be a capital return from the sale proceeds from the banking division. That could be up to $3 a share. So we think it's very, very attractive. And for anyone who wants to buy in, we feel Suncorp around current levels looks very attractive. As part of ANZ's capital raising, they've also provided an update to the market. Within that update, there was numbers on mortgage levels, default levels, current earnings, net interest margin, many of the key indicators that analysts would look at in relation to the banking sector. And what I feel has happened is when the analysts have looked at those numbers, they've been able to extrapolate them across the other banks and get a feel for how the whole sector is going. One key point that was made by ANZ was they felt they were very well provisioned in relation to mortgage, bad and doubtful debts. So I think that's a real positive for the sector. And while ANZ hasn't traded this week, while the capital raising's taking place, if you look at the other three major banks, they've all had very strong moves over the last couple of days. With reporting season upon us starting the 1st of August, there's going to be lots of activity in the market, maybe a fair bit of volatility. So if you're looking for updates on any of the stocks you hold, why not give your advisor a call? I'm sure they'll be able to provide you some details about what's happening.